Here's an invitation for our podcast listeners. If you have a stock that you've been researching, or maybe you've gotten strong recommendations from a trusted source, get a second opinion from Steve and win a subscription to our weekly KPP Premium newsletter. It's our Pitch Your Stock contest. You can call with a stock that you see as a winner, and if we agree, you'll get that year's subscription to our KPP Premium newsletter. Just call us with your stock pick, give us the symbol, and give us your pitch, and leave your number or email. We'll talk about it on the next program and get right back to you. And thanks again for listening to Invest Talk. Welcome to our 1-hour meeting of the minds about money, your money. This is Invest Talk, made possible today and every day by KPP Financial. It's about managing risk while looking for profits, putting the money you worked for to work for you. And now, filling in for host Steve Peasley, our KPP Associate Money Managers, Registered Investment Advisors, Justin Klein and Jason Toper.
Good afternoon, everybody, and welcome to our Friday edition of Invest Talk, the final one of the week. Well, tomorrow, actually. Steve will be on. But today, we are going to talk about many different things, hopefully, because I know there's a lot on your mind, and our goal here is to make the most of what you have in your retirement accounts or your savings accounts so that you can grow your assets in a way that allows you to retire comfortably, and that's really our goal. Whatever's on your mind, whether it's about real estate or stocks or bonds, preferred stocks, all types of various investments, whether commodities, maybe even gold, if you want to get into gold. We'll talk about that if you like. So that's what we're going to talk about today, and our talking point is an article called Preparing a Portfolio for Retirement. And it's on investtalk.com. In the middle of the page, you can see all of our talking points for the week. And you'll see it listed each day of the week. There's a talking point. And this is from Morningstar.com. And it just goes into an example of an average couple approaching retirement and how they should position their portfolio. And I think that's important to a lot of people. Everyone knows, well, when should I start preparing my portfolio for retirement, which means putting in short-term instruments and the like, and when should I be aggressive and get into stocks and for the longer term and stay in stocks for the longer term. And that's very important, especially in these times. So, there's a lot of uncertainty out there, and we're going to go into that. But I'll talk about the market today. The market was down a decent amount. The Dow was down about a little less than 2%. The NASDAQ was down about 2.5%, and the S&P was down about 2%. So it was a solid down day in the market. It was down most of the day, and what were the reasons? One was Accenture came out with bad earnings, and Accenture is a very large company. It goes to the heart of our financial crisis. They were having some issues with slowing demand from outsourcing companies, or companies outsourcing business to them, because they are an outsourcing company. Consulting, because they do consulting as well, and consulting kind of gets hit in these times. But there are also positives to being a consultant, because a lot of companies are restructuring and reorganizing. So, but Accenture got hit, and that hit IBM, and they're parts of the S&P and the Dow, and that was not a positive for the market. On top of that, incomes sagged a little bit worse than expected last month. They were down about 0.2%. Analysts, I think, were expecting a fall of about 0.1%. So that hurt sentiment in the market a little bit. But consumer sentiment, consumer confidence actually rose a little bit better than expected. So there were some conflicting reports, but overall it dragged the market down for the day. On the week, we were up nicely, but that was all because of Monday. The Fed announcing the plan to get bad assets off the bank's balance sheets, and that rallied the market 5-6% on Monday. But if you look at the charts, the market didn't really do anything between the close of Monday and the close of today. It was pretty much flat. So it'll be interesting to see if that's a sign that the rally is fizzling out and we're going to have a pullback, which is kind of more my sentiment, or we're going to be able to break through the resistance that we're seeing in the market. What are the catalysts? What are the catalysts going to be to break through that resistance? The banks could, the government could suspend mark-to-market accounting, help the banks out a little more. That would help. There could be some good economic news coming out next month. But it still seems to be kind of mixed with the economy. There are signs that we're doing better, but there are also signs that we're still struggling a little bit. Layoffs are still increasing. Unemployment rate's still going up. Incomes are still falling, but consumer spending rose 0.2%. And that is encouraging. For 2 months in a row now, consumer spending has gone up. That's positive. It was falling for 6 straight months. So you know what they say, 1 month isn't a trend, but 2 is. And now we have a positive trend. It's only 2 months. It could retrench back to negative growth. Who knows? But that's something to look out for, and that's a sign that the economy could be bottoming out. And that's what most economists are thinking, and that is kind of why the market has rallied so strongly over the past couple weeks. All right, now we're open for your calls. We're live 4 to 5 every weekday. Questions, comments on today's talking point. I know you got to have some sort of comment on this market, this wild market, up and down almost every day. And the lines are open right now. Live 4 to 5 on our program. The number is 888-99-CHART. That's 888-992-4278.
Put a portfolio checkup on your calendar. Steve will be all over Southern and Northern California as this month concludes and into the next month. You can see the dates on investtalk.com. He's also scheduling telephone sessions with investtalk.com and podcast listeners. So go to investtalk.com and click on Portfolio Checkups to see dates and locations, or call 888-99-CHART. And now we get back to this Invest Talk replay program.
All right, we want to answer the questions that are on your mind. We try to make it convenient for you whenever you want to reach us. You can call between 4 and 5 Pacific time, and you can still ask your question live on the air. Or you can call 24/7, 7 days a week at 2 a.m. if you like. If you wake up in a cold sweat worrying about something financially, you want to give us a call, you can do that. All you got to do is call 888-99-CHART and record your question. That's our direct line. And here's a call from Dan in San Diego County.
I have a real estate question. I've got a property that I bought. It's the house I live in 2 years ago. We paid right at $1 million for it. Now, everything around me has dropped about $100 to $150,000. There's a couple foreclosures. So now I've got a couple of years of house payments stashed away, so we're solid for a while. But do you think within a couple of years we'll pull out of this and my value will come back to where it was?
All right, that's a great question. A lot of people are worried that the value of their house has fallen and that they're not going to be able to recoup the loss in the home equity that they've seen over the past couple of years. If your house is only, I'm not so sure. 2 years ago, that was 2007. Housing prices already started to fall a little bit, so you probably didn't buy at the peak. So I could see, your house being worth about $850,000, $900,000. Over the next 2 years, I don't see it.